Albert, how has COVID changed the buying and selling in today's environment?
Thank you, Larry, and thank you to everyone who's attending this morning. Uh, Let me jump right in. So COVID has dramatically changed the way we do business. And I believe we still don't even understand the full ramifications of that change. Let me ask you to just suspend what you think about how COVID changed business and consider the following. Think about Long Island and what happened on Long Island. Let's not focus on Manhattan because that's a different set of issues there. So I know that myself, along with many, thought we'd be seeing tons of foreclosures, many business closings, and frankly, the end of the world. And the reality is that many businesses never stopped. Some actually did better. And by and large, we came out of it pretty okay, not minimizing those sectors that were devastated and the pain that was endured. Believe me, I know and I feel it. But when you look at things, those restaurants that, were closed for a while, they're back. So, Larry, I want to get to your question. What I've tried to do as it relates to buying and selling is to synthesize this to three specific topics that I think are germane, as well as what I call the reset button. So number one is the pivot. Every business pivoted. Some pivoted better than others, some not so much, but every business had to adapt. And we're going to get into that a little bit as we go further. Number two, a subject near and dear, hopefully to your heart, Larry, and CPAs out there, balance sheets. Balance sheets are now stronger. I'm going to explain why, because it leads me to number three. Number three is the amount of money that the government invested in our economy. They poured a ton of money into the economy, and you know what they did with it? They gave it to us. So many businesses who were suffering from the typical burden of debt and the high cost of debt to operate, especially inventory-based businesses, really benefited in such a significant way. And let me share a real-life example to crystallize and really drive this home. We have a luxury goods importer. They import and distribute luxury items for the home. Their primary business is wholesale. They do a little bit of e-commerce. We're in a contract to close in April of 2020. What happens? COVID comes along and shuts down the middle of March. And by the end of April, when they're scheduled to close, sales are off by 80%. Not an insignificant amount, 80%. So the buyer can't conclude a transaction. Lee, I'm sure you've seen this.
Yes.
The other thing that's important to understand is that this sale was approximately $500,000, and the owner has about $400,000 in debt. In fact, it's one of the reasons he's selling. He's been operating the business for 30 years. It's cumbersome to operate, to get the inventory from overseas and have to carry it and have to borrow the money until they get paid by the retailers who are dragging them out 60, 90 days. Anyway, long story short, if he concluded that sale, he doesn't keep very much of his proceeds. And it didn't matter. After 30 years, the seller is ready to get out. So COVID comes along, and how is this seller going to sustain an 80% reduction in sales and be able to manage that debt? The answer is he's not. Now, it's not an older gentleman, not a young man, but not comfortable necessarily with the world of e-commerce and social media and all of the marketing that relates to that. So he hires an expensive consultancy, and they get him a better presence on the internet. And what do you think happens? Little by little, his internet sales start to tick up. And those sales are higher margin sales than the sales to the wholesalers, which are not buying because stores are closed, retail is shut down. The other set of circumstances that happens is he takes advantage of the EIDL and the PPP loans. And those loans come in, some are forgiven, some are long-term debt at a very low interest rate, as you know, and he swaps out his cumbersome, some of that debt was 20% interest for this new consolidated longer-term debt, eliminates the short term for the long term. So what do you think happens, Larry? lowers his cost of operations, increases his margins. What's the result?
Higher profits.
Higher profits. Higher profits. So this company is now on the climb. And fast forward to today, we're in a contract to close in a couple of weeks at a higher valuation than we had before COVID. And more importantly, the seller is keeping much more of those proceeds because he restructured that debt. That's an example how COVID really benefited this particular seller. The flip side is not so rosy. $1 million gym couldn't sustain, had to sell for $100,000 just to get out of the lease. And the seller was happy to do so because he was able to save his house. The point for the listeners is this. It is both equally a seller's market and a buyer's market. And this is what's unique about this moment in time. I would dare say we are in a moment in time which I don't know that can ever be replicated. Low interest rates are enabling higher valuations. The money that's in the market are enabling better balance sheets for these businesses. So we have stronger businesses coming to the market, and we have businesses that could not sell before because of that weak balance sheets, which are now able to sell. On the buying side, you've got buyers who, while they might be spending more for a business, it actually costs them less because of the low cost of capital. So they're able to buy better businesses, and they're able to leverage in a much stronger way. What's coming down the pipeline that gives pause to all of this wonderful news is the fact that we do have tax increases on the horizon. We know that that interest rates are going to go up at some point. Nobody knows when, but we know that that's coming. But right now, it's the perfect storm for both sides. And I have to tell you, I don't think I've ever seen that. I want to close with one last point, and then I'll let Lee speak. When you think about pivoting and you think about buying a business and you look at how that business pivoted, I want to throw the word franchising out there. Why? Because you've got these franchise owners or these franchisors who have 500 franchisees, 1,000 franchisees, 2,000 franchisees, and all of those resources. They also had to pivot. They also had to figure out how to continue to operate and keep their franchisees in business. So in the marketplace are these wonderful kind of soup mix of pandemic hardened businesses for buyers to buy. With that, this is a complicated process, and we'll go through it more if we have time. And that's why you need your team around you to figure this out.